This is Justin Pulitzer. This is my weekend review for Sunday, June 21st, 2015. Happy Father's Day. A lot to cover. Let's jump right in. We'll start with SPY. You can see that, we were starting to make lower highs and then some higher lows slightly. And then after the Fed day, I had said that that range was key, and we got above there, although it was a bit of a, I guess I would say it was a large look above, and now we're back into the range. This day is probably in SPY being shown to be a little bit more bearish than it actually was. It sort of started out with a bit of a disadvantage because there was $1 and change dividend that was paid, and you can see that SPY over the cash index was much weaker. You can see that we are still well above the 50-day in the cash, above the downtrend, and sort of above the bodies of the last swing high. However, in SPY, it is a little bit weaker. You can see we're back below these highs, and we're just sort of hugging the 50 and 20-day moving average confluence, as well as the downtrend. We're sort of just hovering a little bit below there. So I would be saying that I think that the key to this to still higher, so to speak, is recapturing back above this swing high, which was this 212.09, somewhere between 212.09 and 212.48, which were these highs. And I would say that that would put the all-time high and maybe still higher in play. You can see we're kind of smack dead in the middle of the channel. We've just been chopping along for quite a while. So it wouldn't shock me to see some type of a blow-off move to the channel high if we, get some heavy buying into the quarter end, as the the quarter has been very choppy, and a lot of back and forth. Maybe managers want to put some capital to work to get some return. On the downside, if we start staying within this Fed day, I would say that the bias starts shifting a little bit more, the scenario back to sort of the to the bears, and I would say that these lows here would be easily targeted, and potentially these lows as well. The expected move, I believe, in SPY is about $4 this week, and that would roughly take us, given the that will probably move up a little bit as IV comes in, gets boosted as we would go down. I think the 200-day moving average would be sort of the logical target. If these double bottom sort of lows fail, we would easily come down to here, and maybe by then the 200 has moved up a little bit more. But I would say that that is sort of the downside risk. The IWM, on the other hand, is significantly stronger. You can see Friday was a bit of an inside day, really kind of up near the highs of the prior day. So I would say that, again, keeps me thinking that the market is sort of showing a little bit more of a bullish tone. The one caveat is you can see we were in this bit of an up channel here, and we started to lose the channel, and now we've just been riding the backside of that up channel. And the last few times that we've gotten there, there's been some more back off. So if there's some weakness early on in the week, if there's some kind of Greece fiasco, or if this gives way and we start losing this 127.13, then I think there's some room back down into the middle of the range here. Maybe it would be a 50-day moving average test, or something a little bit higher. I would think at the very least would be sort of the 125s if this area fails. So I'm thinking IWM is still looking fairly bullish. One other cautionary thing, although it's sort of a contextual cautionary issue, is our Qs. We aren't showing the all-time. We're not showing as the Qs being at an all-time high, although the composite, the cash index, is at an all-time high. Let me just show you. If you go back, let's say 20 years on the monthly, we are back to the .com bubble day all-time high. You can see the way we got there was a little bit differently. This was a lot more sort of blow-off spiky into the end, and this has just been a solid grind higher. So it isn't sort of the same, but there may be some responsive sellers up at these all-time highs. If a market sometimes is too expensive to buy, it's just right to sell, and some people just step in front of that short. I would say still above 109.42 still higher highs in play. If we wind up coming back down, obviously the 50-day is obviously a point of support. if we come down lower, these lows. But, you know, as you can see, there are lots of there's a lot of references sort of on the way down, and I can't really just see them easily tanking this so quickly, particularly with the quarter. Same thing like in SPY, you know, you have these lows, you have these lows, you have these lows. There's just like a lot of references, so I'm not really expecting like a completely cascading market. The one thing that really has me concerned though with the Qs is that it's making highs, but it's doing it without Apple, and Apple is sort of the general, right, for the Nasdaq. And I would say it's really Apple and also Google. And you can see while Apple is still kind of within striking distance of the highs, it's not making new highs with the index. I do think that on some early weakness next week, this could set up for some type of a right or right out play, maybe against these lows, these 125s. For me, that to me wouldn't be sort of the good low because we're making lower highs. I would be looking for something on these channels, maybe closer to these lows down in here in the 124s, or maybe by the volume distribution and these reference lows down near the lower 120s. That to me would set up as a great right or right out area. I'd probably be a put seller in that area for some type of or with shares for some type of a throwback to mid-range. So Apple is showing a little bit of weakness. Google is starting to firm up a little bit here, but it's sort of back into these highs, and we also know that there could be some room if we break out here over, let's say, the 558s, 560s. Maybe it wants to retest back up into the 580. That's sort of been like the pattern, right? It's like been this range. So it wouldn't shock me to see that happen. There's a moving average confluence down here, which to me would be a good area to kind of play against. You also have this hammer low. I'm not that huge of a fan of Google. I think that they're kind of losing some market share to Facebook, and I think they have a lot of headline risk with the European Union. But their price to earnings multiple compared to, like, let's say a Procter & Gamble is not that expensive. I mean, I'd rather be paying like 20-something or 30-something times earnings for Google than 20 times for toothpaste, which is what I had mentioned in Procter & Gamble. VIX showing a bit of a higher low here. It's still within context of the lower part of the range. So again, wouldn't shock me if we do come down a little bit to see some type of a move. Anything below 1720, though, to me, still keeps this VIX sort of at bay. The first warning sign, of course, would be still to make a higher swing high. We are still incrementally making lower lows incrementally and still some lower highs. So I would say it's still sort of buy the dip. But down here with volatility this low, I've been saying it's better to be a premium buyer than a premium seller for directional play. And I will stick to that story. TLT, this is, as I know this chart's a little bit messy, I'm just going to show you a couple of quick things. You can see on this move here, the bounce back was to the 61.8 Fibonacci retracement. You can see we came down from the highs to this low, and then it stalled out at the 61.8. Again, this could be the same scenario which is happening here. You can see from these highs down to these lows, this would put the downtrend, or I should say the down channel, and the old uptrend line back into play if we have some type of a move, maybe on some grease panic, if sure some short covering if we take out over here. In the meantime, the near-term target to me would be the 50 and the 61.8 within the context of this range. So that would be somewhere between the high 119s and the mid 120s. That would be my first target for some profit taking if we can get through there. And then, you know, obviously these reference highs in the 124s, and then maybe ultimately up here. That's not really a consensus play. I know everyone is still thinking rates are going much higher, but if you listen to the Fed's own admission, Yellen is saying that, you know, I guess they're kind of talking tough. They're talking the talk, but they're not walking the walk. And there was even still some more Fed talk on Friday that was saying inflation, quote unquote, still hasn't bottomed yet. So if we're not bottoming in terms of inflationary expectations, that means that we're still in a period of deflation, and the risk in terms of rates is still lower for longer. If you want to really know more about that, watch my Periscope from this past week. I'm going to put the link to that in the description of this video, so be sure to click on it and watch it. I think it's definitely worthwhile to see if you haven't been following me with my thesis with that. IBB showing some strength, making higher lows now, and now some higher highs, and still higher highs. However, we are getting close to the old up channel top, and that to me would be a little bit of a cautionary area. There's also a 2.618 Fibonacci extension up at I'm sorry, 385. So there might be a little bit of weakness in there. I'm going to show you Biogen is also kind of coming back up to a point of contention. This was really the gap fill. So there might be a little bit more gas in the tank with Biogen, but you are getting into some reference areas where some people are going to be made whole. Gilead also getting close to some targets here, up near a channel high and a 1.618 Fibonacci extension that I had been discussing for a while, which I don't think a lot of people had thought was achievable, but we kind of started from the bottom, now we're here. I do believe that Gilead is still a buy the dip stock. It's still rather cheap on a PE basis and also according to their earnings, but probably time to take a little bit of profits, in my opinion, on strength here in Gilead. Just don't be too much of a pig. If you want to still hold some, no problem with that, but just put on some protection. Ambarella kind of blew its... You know what, before we get into Ambarella, I want to just show you another something that has been catching my eye lately, and that's this JETS. This is the ETF for airline stocks, and you can see I haven't done really much work on this sucker, but I want to show you something here. You can see we're starting to break a downtrend line here, and we're doing it now with higher lows and now higher highs. So the downturn in the airlines might be, I don't want to say it's coming to an end, because I still believe oil is going higher. That's sort of been my thesis. But if you are looking for maybe like a 50% fib, or maybe even a 61.8, which is sort of where the breakdown really kind of occurred, there might be a little bit more gas in the tank with regard to JETS. I always like to buy the strongest one in the patch, and I had put on a bit of a tester trade here with, it was really cheap. I think I paid like 50 cents for it. It's like 90 now days or something to expiration. I think it might be 89 or 87 by the time this video opens. It was 91, I believe, when I put it on. And it was basically a 121, 125 call spread. So if I lose it, I did it small, not really that big of a deal. For JetBlue, you could see it broke the downtrend. I really want to see it take out 2094, which was the last swing high, and it would break the pattern of lower lows and lower highs. So once I saw that, I'd probably start playing this a little bit more seriously. Right now, it's just sort of like a tester thesis, just to kind of get involved in the trade. Delta can significantly weaker. You can see we're well off the highs, still in a downtrend. I don't have it drawn in, but you can see we're well below that, coming back up into some resistance area. There might be a little bit more gas in the tank to the mid-range, but definitely not the stronger of the patch. American Airlines, also the same thing. We are starting to make some higher lows now, a little bit of higher highs. That also has me thinking maybe this pattern is trying to shift a little bit. Also still in a downtrend, though. Let me just draw these in. I didn't do it on Delta, but I'll just draw it in on American. You can see here, still in a downtrend, but there is some room maybe back up to the actual downtrend. So, like I said, I kind of went with the stronger of the patch. So that's my thinking. JetBlue is sort of like the best house in a bit of a tough area. The Ambarella looks to me like it's sort of blowing its brains out. You can see this got really hockey stick like. It was down on a downgrade. I also think some profit taking. There was probably some this was a quarterly expiration in terms of options. The real danger to me with these stocks happens once they've like sort of come down, made a lower high, and then kind of start down again. This is sort of the first leg down, so I'm still thinking it's a buy the dips type of a stock. We're sort of a long way from Kansas here with regard to Fibonacci retracements. The 50% is like $19, almost $20 lower, down at 99, and the 61.8 down at 92. If we do wind up coming down there in a hurry, and it like coincides with, like, let's say the 50-day moving average, which you can see has sort of roughly caught it here. There's a little bit of time spent below there, but roughly here it was caught. I would think that a first retest after this type of a move would be a buy. So I'm looking for Ambarella as that. Someone on the stream had told me that they were short with Ambarella at 119. That to me is a little bit of odd trade location considering the stock was down already a lot this one day. I usually prefer to see something like this and then it like bounce up like to like the body sort of the last one. Maybe there's like a 50, and then it sort of shows weakness. At least you have a right or right out play or a break below. So this was like a 1-day event. I don't know that I would necessarily be shorting it, but I definitely would not be a buyer here with Ambarella. I'm sort of just on the sidelines. If you're short with it, you don't really want to see it take back much of this body here. So if you start getting back up above the body of the prior day's candle, I would be a little bit more cautious here if short. If you're already in the trade, just I guess kind of stick with it. But I would be cautious if there is a bounce that kind of takes that out. And if you take out this day, this is going to be absolutely off to the races for full hockey stick action, probably much higher. It's sort of hard to pick tops. That's not my business. I don't really pick tops or bottoms, but I do look for highly probabilistic setups. So at least on the first leg down, I'd be looking for more of a long for a bounce. And then if we make a lower high on that bounce, and then I'd be looking for the short once, it shows that it's making, that buyers aren't willing to pay still higher prices. The other one that goes with Ambarella is this GoPro. And I'm not a big fan of the company, as many of you know, but I do think that the stock, as long as it's above this 54.06, is still sort of BTD. It's sort of in this chop range. If you get below there, then I think it's going to come back down to the primary trend down here in the lower 50s. So that is my thinking with GoPro, that there could be, it is sort of recharging here, that there might be some room to like the 61s and maybe 67s. But like I said, not my favorite company. I'm not really playing the stock all that much. Amazon was showing some more bullishness here than it kind of was a bit of a look above and fail. Now we're kind of back below these tails. You really need to see Amazon stay above the 439 area for it to be bullish, in my opinion, for still higher prices. Below there, it's a little bit vulnerable, but I believe that this stock longer term is destined to see this 484.73, which is the 1.618 Fibonacci extension, and as you can see, it could happen on earnings. We are, though, starting to break the channel more by, I guess, time than by price, although it's starting to reject a little bit. I'd be just a little bit cautious. Anything below 439, anything above to me is a little bit more bullish. BABA, total piece of JUNK. I could think of many more expletives to describe this stock, but we are into a bit of a right or right out area here with this 84.91, so like 85-ish area here as the kind of the right or right out point. Anything below there to me gets a little bit iffy and you're into the gap, but there could be some type of a throwback up back to maybe like 89 or 90. I'm not really that bullish on this stock. I'm really not that bearish. It acts terribly. Both there's a lack of conviction to the upside. Then often there's a lack of conviction to the downside. You can see that sort of played out here. Like you have these big moves up and then down and then up. It's just a choppy mess. I'm sort of not doing all that much in it, although I do have a slightly tester long in here. I will be pretty out of that, though, if it doesn't really kind of get its mojo working so to speak. BIDU also has been rather kind of non-decisional. It's been a little bit stronger. Obviously, we're back up testing into the gap, so maybe there is some type of a back off just with the fact that this is mid-range. I'm looking for this as some type of a right or right out short for this to continue higher, to get to the gap fill and also the backside of the prior uptrend line, and that to me would be a great day trade, possibly swing trade, right or right out type of a short setup. So that is what I'm thinking with regard to BIDU. If it takes that out, it's I'm not going to really step in front of it too much. I don't really have that much invested either way, but it to me is setting up for a right or right out short. But it may be stronger before weaker, if you know what I mean. Facebook has been relatively strong. It's definitely the strongest one in the social space, still just a few points off the all-time high. Maybe we get some resolution with the earnings. It is marking a lot of time. I think there's still a lot of like 82, 83 sellers, about people who kind of chased it here and are getting made whole. And we're also not in a really directional market. It's been a sideways choppy market, and I think this is held in fairly well. It did pull back a little bit more than I think most people would have liked here, but we kind of did hold this area. We are coming back up. And longer term, I believe Facebook is going to see the sort of the channel high, which is still higher up in the 86s, roughly around where the old highs were, a little bit higher. But I think longer term that this stock will likely see 100 plus at some point. It's got a really good story. I don't really want to get into it that much right now because I have a lot of stuff, other things to cover, but Facebook's still bullish in. Twitter finally showing some signs of life. You can see here you have a low bookended by 2 higher lows, so that's considered a good quote-unquote secure low, and now we are coming back up. I believe that the problem for Twitter, if you want to play long, play it here now against this 33.51-ish low. Anything below there to me puts 29s in play. I believe that there's probably some, I guess, mojo in this stock up. The problem is that it's a kind of a country mile away of where it really needs to get higher out of. When Costello here resigned, the stock did have a spike after hours to 40, 45. So anything below there to me is still a little bit vulnerable. Longer term, I think the stock is going to come up close somewhere between, let's just call it 45. On some takeover speculation or rumoring, or maybe they finally actually have some decent earnings, or they're not as bad as there's a lot of fear built in here. I mean, the stock came down really hard. A lot of chasers are in, kind of bailed. There's been a lot of sort of capitulation on it. I think that the stock will see higher at some point, but I don't know that it's not going to see lower first. I know a lot of people are speculating on this being taken over by Google or whatever. The only question is it going to be taken over here, and are they going to pay 45 or 50 bucks, or is it going to be taken over at 15 and they're going to just kind of get you back to where you started? I don't like to play takeovers when fundamentals are deteriorating, although I do think that given the sort of outlook for the market, that this is, as good of a trade as any against this 33.5 low setup. So that's my story. I think Twitter is a bit of a long on dips as long as that low holds. LinkedIn holding into the gap. Looking like it's going to want to fill a little bit more, maybe to the 50% fib. If there's some type of a pullback, there's the right or right out trade as long as it's still above this 209.5. That to me would still be quote unquote healthy. My favorite stocks are the cybersecurity stocks because they have the sort of the wind at their back with regard to news flow. FireEye, though, is up a lot, really straight line. There may be some lock-in ahead of the quarter. If it does wind up pulling back, I would be buying it sort of for a window dressing for the quarter, if that makes sense. It's sort of do the opposite mode. There is a little bit more room up higher, I would see, but risk-reward high. I mean, you're playing for like another $2 with risk, in my opinion, back down to the breakout of like the 46 area. I don't have a fib on there, but my guess is that it's got to be a bit of a fib retracement. So I'm looking for this as some type of a buy back in sort of mid into range. I would be a buyer of FireEye. It's a little late to chase it if you're not in already, but that's my story. For CyberArk, caught up a little bit here, now just kind of testing above these highs. Anything above 70.48 still bullish. Back below to me gets a little bit more iffy, and there's probably a move back somewhere mid-range here if that does fail. If it winds up continuing up, more power to it. Palo Alto, also a darling of the this sort of cybersecurity area. However, we are getting up close to the channel top. This stock to me is shown to be a buy. You can see even all the way back here, the 50-day moving average is proven to be rather strong support. So if there is some type of weakness, if there's an overall market correction, I'm looking to be a buyer of Palo Alto on the 50-day moving average. Netflix has been chased, and news is it's starting to bend a little bit back over in terms of the stochastics. I believe that this will stay strong until they do the stock split. However, into earnings, I would be, if you haven't taken some profits here and you've been long for a while, don't be too piggish. The stock, probably will go higher, but I believe it's also possible that there is some type of a pullback lower. Maybe to shake the trees a little bit and get out some of the weak hands. This was a really big move here. You can see the low of this day here was 625, and the next day, the high of the day was almost $700. I mean, it was 692. So, this is a bit of a blow off. You could see this had a big spike in volume. I think it's just working some of that excess off. It really isn't that insane, although, because it has worked off some of this, but like how it got there in terms of the gaps is just, there's got to be a ton of guys still trapped short in this. So I do think it's a buy the dip stock. I don't know. At some point, I do believe it's going to come back into this range. I don't know how, when, or why, but I would be a buyer on Netflix on dips, particularly ahead of the split. That should hold it. but just be a little bit careful with your chasing. Don't you don't want to buy the high. Price line acting very weak. Lower lows, kind of just in a grinding fashion. I think that you'll probably find a little bit of support here back near these reference lows in the 50. Actually, it's not even the 50% fib anymore because this did go a little bit higher. This was 1280.97. Let's update that here. 97. Yeah, so this could come back down a little bit lower. I think that this area, though, somewhere between this 1137 and 1103.31, which is now the 61.8, somewhere in that area will probably be a BTD type of right or right out play. There might be some currency concerns in this one. That always seems to be the case. That's also, by the way, something with Facebook. If you start seeing a really strong dollar again, that could be a bit of a problem. TASR, another one I really like in terms of the longer term story. Just holding out above the highs here, a little bit of responsive sellers. But I believe that the wind is sort of at their back in terms of news flow. They have all of these incidents like Ferguson and Baltimore and people, filming police arrests. I believe that this has years of government, of local municipality and government contracts coming into play. Not sure that it's, a great chase up here. I'm definitely a buyer. I would be a buyer of dips on this stock. I have a call spread on in this. It's been doing okay. But I believe that it's a buy the dip stock. I think that TASR is a great story. So that's my story with that. Tesla, I'm bullish. I think the stock still goes higher. It's just been kind of consolidating its gains up here. If you're not in it yet, you might want to just let it, kind of break this high up here. My concern, though, is this 265 used to be kind of the old all-time high in Tesla, and it was the check-back high back here. So I believe that there'll be some responsive sellers in Tesla. It's going to take a little bit of time. Also, with the news at their backs, though, they have the Model X coming out. Eventually, I expect the old all-time high of Tesla to be retested, and I expect there to be a Fibonacci extension type of move. And for those of you who, unfortunately on TOS, they don't really have the Fibonacci. I don't love their Fibonacci extension tool, so what I do is I use the Fibonacci retracement tool. Oopsie. And I basically go from the old high. I will bring it down to the low here, and then I adjust if it doesn't snap properly. And then what I'll do is I'll go in here to the properties and I'll add in the 1.618. You could also just do the math. It's really not that big a deal. But if you take a look where that takes you up to, it takes you up to 359.94. And that's sort of where I think Tesla might be going. I think the stock looks bullish. I think oil is going to still go higher. I've discussed in previous videos that I think it could see 67s and 75s. I don't want to go over that. I want to try and keep this video a little bit shorter than usual. But I believe that Tesla is still higher by the dip stock. The last one I want to leave you on is one I don't talk about. I know this is a little bit of a teaser for me because I'm going to talk about healthcare stocks in my Periscope session this week. But if you take a look at United Health, this is sort of like the big Mac Daddy of them all. This has a left shoulder, a head, and a right shoulder, and a neckline up here. And it looks like it's going to try and make some type of a head and shoulders, inverse head and shoulders breakout higher. So I am watching United Health for some type of a play higher. I'm going to discuss that if I do get involved. I'm not in it right now, but I will discuss it. I think if you can get back over this price action, you can see it was a bit of a look above fail. If you can get back above this high, this 122.20-ish, I think the stock will take off and you'll see still higher highs. So that's sort of what I'm watching. If it winds up pulling back, then just don't sweat it. The setup might fail. Anyhow, that's my story. I'm sticking to it. If you're not following me, my handle on Twitter is @JustinPulitzer. Be sure to follow me on Periscope, which is the video app. Also by Twitter, you just download it in the App Store, and hit the like button if you found this video useful, and be sure to subscribe to my channel. There's a subscribe button right below the video. Anyhow, I'll post the link to my last Periscope session where I discuss my views on the Fed. That'll be in the description of the video below. Let's have a great week, and cheers.